JD, there's an M&A master plan underway in the mid-tier gold space in Western Australia, and we've got some theories out there. But what kicked off our interest is yesterday's deal that Genesis is spending $250 million buying the Laverton project from Focus Minerals, and we think there's more than meets the eye to their plan here. It has implications for Genesis, Focus, Regis, Vault, Magnetic, and even Anglo Gold Ashanti. So if you're interested in the M&A landscape across the WA gold companies, which you should be, because kind of matters a fair bit in the market at the moment. Stay tuned. Spoiler, we think Genesis is going to do another deal soon too.
Absolutely. Stay tuned. We learned a heap in the lead up to this episode, didn't we, mate? Talking with people. Why don't we rip into it with the deal?
So Genesis have come out. They've bought Focus's Laverton project. We've talked about the fact that this has been for sale for a while now. What are they paid, mate?
$250. So a lousy deal for Genesis, just $250 million. Going to be paid in cash, funded from their cash reserves, obviously company net cash, and the deal should be wrapped up next month. Pretty straightforward. Obviously buying this from Focus Minerals, a much smaller business. Now, the payback isn't exactly straight. We're going to get into all of this when we talk about the master plan that we think is at hand with Genesis. But given the mill was already full and a fair bit of work needs to be done on these tenements and on these resources that they're buying, it's not exactly clear when they're going to see a return on this, but it's all going to come together in this broader strategy. So,
but the mill is full in like quotation marks. However, like a lot of commentary has been out there in the market that Genesis could use with some higher grade feed to go to that Laverton mill. That Laverton mill, of course, Mount Morgan's former Dacian mill. It could use some higher grade. Are they going to get higher grade here? The headline is 4 million ounces in this project, but is it really 4 million ounces?
Well, it runs at 1.7 grams per tonne, but I don't know how many asterisks you want to put next to this. A fair bit of work needs to be done on this. The work that has been done to date was done quite a while ago now, and a lot of these were the old pits. Work has been done in and around the area, but there's a reason they're not being mined right now. The reason why they've obviously come in and scooped this up is their sort of consolidation of the Laverton area. So we're talking roughly 30 kilometres, but we're talking from a bunch of pits and a bit underground as well. Now, that Laverton mill has just been flicked back on. In classic Genesis fashion, you'd say it was flicked on early, ahead of schedule, all these things. Genesis know what they're doing on that front. And it came in with this fantastic headline, form is temporary, class is permanent.
How good's that?
Love that. So to your point on the grade that they're processing, 0.9 grams per tonne right now, that is obviously a lot of stockpiles being treated, low-grade stockpiles that have been treated. But as long suspected, they're now sort of acknowledging that the Tower Hill dirt, for people wondering which one that is, that's the sort of deposit that has the rail track right over the top of it, almost in the heart of Leonora, is not actually going to be sent 100 kilometres away to the Laverton mill. They can process that where it makes sense in the mill that's right next door, and they can have this Focus Minerals dirt go into the Laverton mill once they've proven it all up.
Which could still be a while away. This is 4 million ounce resource is a chunky headline, and it's worth some interrogation. And at face value, you think 250 million for 4 million ounces. So I don't know how many 4 million ounce projects there are out there to buy, but it's kind of doesn't seem like too much to pay. And then you look into the detail a bit more, and there's of course those asterisks like you talked about.
100%, mate. 4 million ounces can come in many different shapes and sizes, but the question everyone really wants answered is what is the quality? What are the hairs on this resource? And if you're not answering or asking that question, you tend to have a strong opinion on that one. And I think if you look on the first page of Genesis' announcement, under their priorities, you get a good indication of what Genesis think. Now, just read it out quickly. Infill and extensional drilling to de-risk and rebuild the resource. Rebuild the resource. Those words kind of stand out to me. So clearly it needs a bit more work, but 99% of the resources and the reserves sit on granted mining leases, which we know in this day and age is not the quickest thing to attain. So it's got that going for it at least.
Yeah, definitely this view out there that Chinese owned development projects are pretty substantially overstated. There's a view that kind of every intercept is called an ounce or interpreted as an ounce. There are these kind of big crazy block models. When you sift through it, it kind of falls apart in your hands. So that's a perception out there. And I think in the case of Focus's Laverton project, the headline's 4 million ounce mineral resource. Theoretically, a resource ounce needs to have a reasonable prospect of economic extraction, right? That's the
Part of the code.
There's certainly not 4 million ounces that have a reasonable prospect of economic extraction here. How many are there? That there's a bit to play out here. I think there were probably many people in the industry who tried to get access to Focus's data for many years, and for a long time it was just impossible to actually do a deal with Focus. They were kind of land banking it. There was a bunch of debt in their cap structure from Shandong. You couldn't get anything done. They wanted more than book value if they were going to explore anything. Now we're in this gold market. A few other things have happened, which we'll get to, and finally people got access to a data room, looked at the data, and they might have had high hopes on what they could have actually uncovered, because there's always a bit more access you get into in the information when you get, the data room versus the public data. And
Absolutely. And Focus as well is now focused, pardon the pun, on Coolgardie firmly as well. And you mentioned the massive amount of debt. So the timing was right for something to kind of happen here.
The point is that the data on Laverton maybe didn't quite meet expectations of what there could have been, for sure, which probably just underlined the perception of buying projects in the hands of Chinese parties.
But they got a deal done, mate.
They got a deal done, and I think if you look at what part of the resource would have been of hot interest to Genesis, it's probably, in my view, the stuff east of Sunrise Dam. I'm talking it's like Barnacote, Carradale, Burtville. If you look at the map, which we'll pull up here, of all the different resources that fit into it, so Focus's resource on those areas sort of earmarked to be 1.5 million ounces in that area. It's also where most of the reserves are too. The catch is that some of these are estimated under the JORC 2004, which indicates the rigor in some of that estimation might not quite be up to scratch. All of this to say, I wouldn't be surprised if all of this sort of ground sits on Genesis's books for 2 to 3 years before they update their own resource on it and do it in their way, kind of re-estimating things. I'm sure they'll put plenty more holes into it in that process.
Mate, all this talk about resources that need a bit of work, there's a certain company that comes to mind for me.
K-Drill.
K-Drill. If you are looking for the goods, if you want to prove up the goods, if you want to be mine ready, K-Drill is who you want to call, mate.
Mate, what do you reckon is a good daily target for a diamond driller?
Oof. 300 metres?
A day?
A day?
A day. Mate, meters? Try kilometres. That is what Rhino does. Diamond holes in the goldfields dirt. It's like a knife through soft butter to him and the team.
It's not just that either, mate. The sample quality is top notch. If you want clean recoveries and you want tight QA, QC done, K-Drill is the team you need to call. You want those assays to come back and you want to know that you can trust them, K-Drill is who you want to call.
Mate, whether you're exploration work or a mid-tier, locking in a longer-term program, K-Drill's got the gear and the people to handle it.
Quick turnarounds and a team that actually knows what they're doing. They can actually work with the geology. Again, K-Drill.
You want to upgrade that JORC 2004 to something credible, you need Rhino to punch a few infill holes. Get in touch with K-Drill. Thank you, K-Drill.
Genesis, call K-Drill.
So what was one of the reasons, do you think, that Focus might have been willing to part ways with Laverton? Was there a perception that them actually getting approvals to develop this was in doubt?
Yeah, approvals is an interesting one, and it's probably the right time to plug in a completely unsubstantiated rumour that we'd heard. You can see, and I'll flash up the map here, that to the northeast of Laverton, and this is right in amongst the tenements there, is the Jindalee Operational Radar Network. And I had no idea what this was. I saw it pop up yesterday when I was just looking around in the area. It's a over-the-horizon radar, which the military uses, and essentially it enables them to, quote-unquote, see thousands of kilometres away. So there's a few of these across the country. They're pretty important militarily, and it just throws up the question, would Focus, if they wanted to progress these or other projects in the area, have been able to get the approvals given the strong Chinese ownership of Focus? So again, we don't know the answer to that one, but I thought it was an interesting little rabbit hole to go down.
As a result, Focus might now just be focused entirely on Coolgardie.
That's it.
Now, you've been piecing away Genesis's broader growth strategy here, and I've been theorising about the M&A strategy. I think the two are related, but let's kick off with what you're piecing together, reading the tea leaves about what Genesis is pulling together.
Yeah, 100%. They're clearly in an investment phase and not looking to harvest cash at the moment, like some of the other goldies we've seen in this sort of pretty rich gold price environment. So I think the logical next step is just mill expansion. They've clearly got heaps and heaps and heaps of tons. They've got all the tons. They call it sort of long ore in their wording in a lot of their presentations. Mind you, they were saying that before this deal. So
is everyone not like long ore in this gold price environment, you just recut your reserves, lower cut-off grade, and all of a sudden, oh yeah, you know what I mean? Like everyone makes more money by putting more tons through the mill in this gold price. Surely everyone's long ore at the moment.
Sure. I mean,
Good time for the EPC. Yeah.
in any case, you're longer after spending $250 million and pulling in another 73 million tons of dirt, right? And I mean, Genesis have clearly signaled to this mill expansion. So studies ongoing at Leonora. In the priorities, it was another one of the relatively high up points there that they're going to be doing the work that they need to do at Laverton. Obviously, kind of to your point, it needs to be the right grade that goes through it. You don't just do it for the sake of doing it. And interestingly, they said they're going to refurb the Barnacote mill, which is sort of coming into the fold in amongst all these in amongst the Focused acquisition. That's 1.5 million tons per annum capacity. Who knows how much capital that needs to get it, you know.
I didn't even know there was a
refurbed.
mill there. Like I did not know that Focus Laverton had a mill on it. So
Didn't know till digging in the weeds either. But
must be pretty. You can't imagine it's in.
it'd be a bit
great shape.
dated.
Yeah.
I'd say for sure. So 350 million tons in resources now. If you're generous and you include Barnacote, which is clearly a little while off, that's 6 million tons of processing capacity that they've got when they're sort of running the mills that they've got currently at over nameplate, which they've been doing for a couple quarters now. That's more than a lifetime's of ore. So cash harvesting still a little while away. Investment's going to be going into the ground, and that has plenty of benefits. You know, that pulls down, and you can spread that fixed cost base over more ounces once you do that. And you know, there's a reason why Dacian ran into trouble with their sort of Laverton mill there. A new owner and a high gold price doesn't just fix that immediately. You need to try and pull down the cost base and do the things you can.
High gold price makes a big difference.
It helps. It certainly helps. But I think
Yeah.
I think expanding that is all a part of it, and creating this blue chip company that Genesis is on track to be needs lower and lower costs, and you need to invest the capital to get yourself there.
Yeah, I'm not sure there'll ever be a company that's in cash harvesting mode. I don't think that's like the MO of Genesis. I think they back themselves to grow via acquisitions at the right price and yada yada. And
Yeah, I've got
redeploy the
pretty
capital internally.
got pretty strong views that I was going to sort of wrap up on that.
Yeah.
100%. There is a playbook that this company has run for the last 3.5 years, and
prior to Genesis, Saracen, same playbook. Yeah.
yeah, exactly. And yeah, just look at what happened with Northern Star. Maybe rinse and repeat isn't too far from what we're seeing right here. Hey?
Yeah.
So let's talk about the M&A piece. This is clearly a cornerstone piece of their growth strategy.
Yeah, I'm gonna speak a little bit about my pretty unfounded theory of what I think Genesis could really be up to here. And as far as I can tell, no one is talking about this, mate. We've spoken in the past about the tremendously public sale process that Magnetic Resources has been embarking on. I mean, the number of parties in the data room was the headline part of George Sakalidis' speech at Diggers 10 months ago, but still no deal from all those parties in the data room. That doesn't stop him from telling the press how many people are in that data room, mate, because there was an article in the West 2 weeks ago suggesting there are 7 active parties still sifting through details in the data room of Magnetic Resources. So what's really going on here, right? Well, post the Diggers excitement last year, Magnetic kind of came back to earth. Share price fell off from like $1.60 all the way down to, you know, just above $1.10.
Kind of shows you how rough a strategy just buying on the expectation that a deal gets done.
Yeah. However, it's been on a bit of a tear since coming back to earth. It's now all-time highs, reaching $500 million market cap, $1.78 share price today. Now, what is Magnetic? What have they got? Lady Julie North 4 is the shiny discovery that has been a game changer for Magnetic. This discovery is not without its own question marks, and one of the question marks over Magnetic's project is the ability to actually mine the deposit, because you're awfully close to Magnetic's tenement boundary. And I'll just flash up here. Here's a plan view from Magnetic's scoping study. Can you see the pit labelled LNJ4 at the top? It's pretty damn close to that boundary, right, JD?
One of the problems being the ability to mine the deposit is a pretty big problem.
It's a big. Maybe you can mine some of it, but in order to actually get the full value,
break it down in detail, mate.
If you look at that plan, most people in mining, they'll have a few observations about the real open pit constraints of mining LNJ4. You should typically calculate an abandonment zone by getting an angle from pose to the fresh oxide contact in the pit. Run that out, then you factor in a buffer zone, which is typically 50 plus 50 meters to mine the ore body. if you do that for Magnetic's project here, you quickly find yourself beyond the northern boundary. Now, guess who has the tenement to the north of Magnetic's boundary there?
Focus. Genesis.
Genesis now, yeah. Well, so over the last year or so that Magnetic has had its data room open to every Tom, Dick and Harry in the gold mining industry, what do you think everyone has probably gone and tried to do? They've probably all realised the boundary mining constraint I just pointed out, and they've probably gotten in touch with Focus to see if they would, carve out a slither of that tenement to enable, proper mining scenario with sufficient abandonment zone for the pit walls and everything that's required. And Focus has probably been pretty commercial and said, nah. Focus has probably realised that that slither could very well be a substantial part of the potential value of their Laverton gold project.
You would have learnt from your banking days, mate, that is leverage.
It's leverage. So after 6 odd months, it seems to me Focus decided to instead run a sale process themselves over the entire Laverton project. Everything, all 4 million ounces that are there. And now that's sold to Genesis. And all of this poses the question, if you always needed Focus, or in particular that kind of tenement of Focus, in order to mine Magnetic's LNJ4, well, now Genesis has Focus. Are they therefore coming for Magnetic? And that's something I do think we really need to consider here. And Magnetic is absolutely not cheap, mind you. Its market cap is $500 million. It is expensive, but Genesis are in pole position. And when they're in pole position, because you can't really maximize the value of that without Genesis now, well, they probably don't feel the time pressure either. They can take their time. No one else can really mine it without them. So there's no like impending, they're going to bid Magnetic now imminently because
they have the leverage.
Like who else is going to buy Magnetic when Genesis is the one with the leverage?
Yeah, and they have that sort of block of shareholders at Magnetic that they need to win over, and they'll be going through that process now, I would imagine. If we look around the area there, mate, maybe we'll pull up the map again. Sunrise Dam jumps out at you.
It's an interesting discussion point. Sunrise Dam, obviously owned and operated by AngloGold Ashanti. Now, we reported word on the decline in our daily newsletter, The Director's Special, last week that AngloGold may have been fielding sneaky bids for Sunrise Dam. By the way, JD, all of our listeners, the money miners, if you aren't subscribed to The Director's Special, pause the podcast right now, go to moneyofmine.com, put in your email, then click the confirmation email that comes into your inbox, then press play on the podcast again, because there's real alpha in our newsletter. The Metals Acquisition Corp, or MAC Copper, trading halt deal today. I don't know if it's out by them by the time this podcast goes out, but we first reported that rumor twice in the Director's Special over the last few months. First on March 21st, then again on the 1st of April, and
months ago.
Now 2 months later, mate, MAC is in a trading halt, and you can read the exact same rumor that we talked about, that it's Harmony Gold buying MAC in Street Talk today. So if you want the inside word on the decline every morning before it's in the newspaper headlines, or months before, Director's Special at moneyofmine.com.
Shameless promotion, mate. Enough of that. Let's focus on Sunrise Dam, mate.
So we reported Anglo was fielding sneaky bids for that in the Director's Special last week, and we didn't name Genesis then, but we're pretty sure it was Genesis that submitted a bid for Sunrise Dam to Anglo.
We'll name them now.
There's no public information about Anglo selling Sunrise Dam for what it's worth, but look at how Anglo categorises its portfolio, right? It splits its assets into what it calls Tier 1 and Tier 2. Slide 7 of their investor deck, you can see there are 2 Australian projects there. Tropicana, clearly labelled a Tier 1 asset. Sunrise Dam, clearly labelled a Tier 2 asset. So it wouldn't surprise me if AngloGold thought about capitalising on the gold environment that we're in, and sold Sunrise Dam in the good times to quote unquote improve the quality of its portfolio. I could see them doing a playbook like that.
Yeah, it'd be refreshing to see a major sort of rationalise assets in the portfolio, not at the lows of the market, like we saw 10 years ago, but now we saw
Newmont sold all their Tier 2 stuff after the merger with Newcrest.
A whole heap of assets that they didn't pass muster for them being sold. It's all part of this evolution in the major miners becoming better stewards of capital, which hopefully in time they get rewarded by institutions.
And at one point in time, a Tier 2 asset could have been a Tier 1 asset, so at a certain point in a mine life, it makes sense to sell it off. And
absolutely.
Now, if Sunrise Dam was up for grabs, I think it would be incredibly competitive, personally. The consensus around Sunrise Dam is that there is a lot more gold, and the asset will keep on giving. Maybe even a bit like Gwalia. You know, kind of there's lots of depth extensions. There's plenty of gold there. So you can imagine why Genesis would have an interest in that case. But let's wait and see if Sunrise Dam is actually gettable and whether or not Genesis are the ones to emerge with the chocolates too. But you could pretty clearly picture a scenario where Sunrise Dam, Magnetic, and Focus could all come together and all of a sudden, you know, if Genesis managed to get all of that stuff together, there's a pretty interesting, you know, Laverton hub that they've managed to consolidate.
Yeah, they want to consolidate the area. Makes perfect sense at the right price.
JD, Sunrise Dam and Gwalia, they're both underground mines. Now, underground mines need ground support. Time for our Sandvik ground support minute of the week from Derek Hurd. What is the variability in manufacturing across all the globe effectively?
Yeah, I think you've seen, obviously, you know, when you say the DSI business globally or the Sandvik ground support division, you know, we've got 20 plus manufacturing locations around the world.
It's crazy.
And people go, oh, why so many? Why don't you consolidate? And the reality is most of our product is steel. So in terms of quantity, we're shipping or selling 500,000 tonnes of steel, you know, a year to customers. And so to move that logistically would be a nightmare. So it's very much a regionally focused manufacturing because of the sheer volumes of material we have to deal with. And part of that strategy is being close to our customers for that responsiveness as well. So, you know, logistically and from a service perspective, it makes sense to make product where your customers are.
Thanks, Derek Hurd and Sandvik ground support.
Okay, mate. Let's bring another party into the fold here. Genesis have pretty long been rumoured to do a deal, a merger with Vault, formerly Red, and Silver Lake came into all of that. What do you think this means for them?
Oh, mate, I feel like our podcast will never officially be over until those two companies merge. Seeing as the battle for Leonora was the beginning of it. And wasn't it interesting to see Vault reveal an announcement of their own yesterday, the same day Genesis announces that they've bought Focus Laverton. And in a nutshell, that announcement from Vault, it basically said that they're expanding the mill 50% to be capable of 7.5 million tonnes per annum throughput, while they also recut their own reserves. And the grade of those reserves has fallen some 33%, allowing a 33% increase in the number of ounces in the reserve. You know, the old kind of cutoff grade dynamics at play there. It's kind of remarkable. You read it, and the cutoff grade for the reserves is now a 0.23 grams per ton open pit cutoff grade for reserve. That's the gold price environment where we're in. It kind of allows a cutoff grade like that.
Yeah, the head grade now, well, the reserve grade rather, really jumps out at you. Just over 0.6 grams per ton.
Yeah, I think that's the important number. And I'll flash up a reconciliation kind of waterfall you can see of the not the reserves but the mineral resource, and you can get a picture of how, you know, things have changed from their last resource. And as it relates to getting a deal done with Genesis, if you just think about what, like, you know, Vault or Red 5 whatever was doing historically, you know, they were stockpiling ore at 0.9 grams per ton from mining, but producing from the mill at 0.6 to 0.7 grams per ton, and it just didn't compute, right? And I think Genesis would have no doubt been like pretty hesitant or reluctant to do a deal and consolidate when the market expectations about what the reserve actually was here from a grade perspective was pretty overcooked. So I interpret the disclosure on Monday as a necessary part of bridging a bid-ask spread to enable a consolidation to happen there. And you can kind of think of the mine plan disclosure that came out of Ramelius a few days before the deal with Spartan, right? There was a necessary disclosure to bridge a bid-ask spread. I'm not saying there's actually an imminent deal to be had between Vault and Genesis. I'm just saying that this grade reserve issue might have been a point of contention in discussions, and the disclosure is necessary in order to actually see, you know, the future consolidation here.
All part of that process.
Yeah. So is it enough to fully bridge it and get a deal done? I don't know. So Vault's going to expand their mill. They're going to get better economies of scale to support lower mining costs that make low-grade mining better. But even with that, I look at stage 5 of the mine plan for King of the Hills. And you can see it in this chart here really well. The strip ratio is in that stage 5. Granted, stage 5 doesn't kick in until 2032, but the strip ratio there is like nearly 6-1. And I wonder if that part of the mine plan where you get lower grade, high strip ratio, I wonder if that would have stacked up if they didn't increase the gold price used in the reserves from $2,900 an ounce Aussie to $3,750 an ounce. I'm convinced that eventually these two companies do merge, but that doesn't mean that either company is a buy or a sell right now, because there's plenty that can play out beforehand that influences, what the ultimate merger ratio could be.
Yeah, the gold price assumptions is a really interesting point as well, because the gold price has shut up so quickly, right?
Yeah.
That 3,700 might seem pretty far away from where we are, but time-wise, we were there not that long ago. To pull in one more company into the fold now, mate, Regis. We spoke about Regis just a week or two ago with regards to their reported interest in Ravenswood, which we suspected had ceased, and that's sort of eventuated now in the press. They're a $3.7 billion company, 370-ish million in cash. Now, we put forward in that episode, so you can go back and listen to it, why we think they're hungry to do a deal. Now, there's one less asset potentially on that list that they've got.
Yeah, I think we spoke about the fact that I wouldn't be surprised to see them have interest in Focus Laverton. Obviously, that hasn't eventuated. Genesis has picked it up. I do think Regis is up to something, and I can't quite pinpoint what it is. I think they're pretty damn motivated right now. And yeah, they're making a lot of cash right now, but that cash generation dynamic is not going to last forever for them. The nature of the mining methods are evolving and changing, and at Duketon, the mineralization gets weaker at depth. There's still question marks about the long-term economics of the underground model there. This gold price, they'll still make money, but it's like, how much are they going to make? Their scrip is valued really well, and I'm sure the Bellevue opportunity is front of mind for them. I can't quite figure out what they're up to, though, because I wouldn't be surprised if there's something else too.
One more company to pull into the fold here, Focus, the seller of the assets. So they closed up a pretty lousy 90%. Right? They had a ripping day, and they're a funny company, right?
Yeah.
Majority kind of Chinese ownership. At one point, they almost tripled yesterday.
Yeah.
They pulled off a little bit from that, but
Yeah.
they're now going to pull back their focus onto their Coolgardie operations. Plenty of gold down there. So market cap of 110 million.
Yeah.
Enterprise value of 26 million. So
the big hindrance in their capital structure has for the longest time been that $186 million in debt to Shandong. Shandong is their largest shareholder. I think they own like 62-ish% of the company.
yeah,
There's issues with Shandong kind of increasing its equity ownership because of FIRB and all that sort of stuff. So the way that Focus has effectively just been continuing to fund its negative cash flow for several years now is with this increasing kind of debt to Shandong. Very interestingly, now they're going to be net cash.
yeah. A funny company.
Very funny company. It's always been like, there is no world where I'm going to buy shares in Focus, because it's just too hard a proposition to ever kind of come to terms with when you've got.
I'll try and
all that
tempt you,
kind
mate.
of
Okay, so never mind that they trade less than $100,000 worth on a good day. Might be a problem for a big swinger like yourself, but recently they've been running the mill at about 1.5 million tons per annum run rate. A lot of that is third-party ore that they're trading, so they're just taking a fee for that. But development at Bonnie Vale, this is their underground development, is churning away, and pretty soon they should be producing from the gold down there. So they've got Barminco down there doing the mining services. Now, this has an ore reserve of 180,000 ounces at 6 grams per tonne. So cracking grade down there. And then they've got a couple open pits which have been feeding into the mill for, call it a year or so now. So only 4-ish years in mine life. They're going to do some exploration work and try and prove that all out. But, they've got much better capacity to do that, to prove it all out, to do the work they need to do. Being better capitalised, they should make pretty comfortable cash, EV of 26 million. Just wouldn't bank on any of it coming back to you as a shareholder.
You know what? Like, it closed up 90%, and I feel like it was actually just an absolute no-brainer in the lead-up. Everyone knew this was for sale. Everyone knew the ballpark kind of price was probably going to be between $200 and $300 million that it went for. You could pretty easily work out that this company goes to net cash, and then the share price up 90%. It was sort of, it was a layup, but still you couldn't convince me to buy shares in Focus.
All right, mate. We'll move on to the final kind of talking point. Something I find really interesting with Genesis again. So it's the art of institutional appeal, which I think there are a few better in the space out than Genesis. And I'll just lay out a few kind of facts as I kind of see them. So to have strong institutional appeal and to get your stock price up, ultimately, you need to check a few boxes, right? So you need operational performance. That is table stakes. You need to meet and then beat, upgrade your guidance consistently. And you also need to do things like bring stuff on earlier than planned, in quotation marks, like I mentioned before. You know, you need to understand what your goals are and you need to hit them reliably. You need to have balance sheet strength. So that's point 2. These guys are net cash. That's 101 sort of stuff, you know. Management needs to have a proven track record. Check.
Aligned with shareholders.
Aligned with shareholders as well. They easily hit that one. Capital discipline is the 4th point I've got here. Now, this one takes time to be able to actually observe. It's something you observe in retrospect. But the gold price to date helps them phenomenally. And they try and talk to this by that chart that they use. And they say, this is when we bought this price, you know, this gold project, counter-cyclical investment, yada, yada, yada. You know, in all fairness, like the gold price is ripped. You can kind of make that argument easily now. But that needs to play out over a number of years to be fully proven out. And all these sort of tailwinds help. So the gold price jumping up, them having done those deals that they did a couple of years ago allows them to now use revolving facilities as opposed to project finance. You get a lower cost of capital. So there are tailwinds on that front too. Then you need a growth story. We've literally spent the whole episode talking about Genesis's growth story.
There's a few in the portfolio we haven't even touched on. I mean, of course, like Tower Hill's been a long growth story, mill expansions. We haven't even talked about like Bardock and all that sort of stuff that they've got that could
100%. They're talking about at Hub drilling more, potentially going underground, all that sort of stuff. Another point I've got is that you need liquidity in your stock and you need to be included in indexes. So if we go back 3 years, they're in the All Odds. We look today, they're in the ASX 200, they're in the MSCI Small Cap Index. They're in the GDX, they're in the GDXJ. They're closing in on the ASX 100. So they've knocked that one out the park in pretty short order. And the last point I've sort of got is your marketing side of the business. You need sell side coverage. You don't want to surprise investors with news. You sort of signal to these things. You don't want to get on the wrong side of proxy advisors, all that sort of stuff. You've got the growth story wrapped into it that you can market. That is Aspire 400, which Genesis regularly talk about.
You're totally right, though. They are elite at anchoring expectations, like at a point that they know is achievable, and always kind of over delivering to the upside. And it was the same with Saracen. It's it's one thing to anchor expectations lower and over deliver, but then it's another thing to consistently deliver. Still, despite the fact that it's a lot of unknowns that you come across in mining.
I mean, these guys know what institutional investors want. I think that's one of the easiest ways to kind of capture it. But all that leads me to the final talking point, mate. You think Riley's gonna step back in the near term? So there was a lot of talk about new execs coming on, a lot of putting other people within the business, whether that be sort of Matt Nixon front and center, and you could argue that's just great leadership, praising your people in public. There's always a comment to that effect in the statement. It could also be a bit of both. Riley slowly stepping back whilst just being a good leader as well. But I think it's an interesting point worth discussing.
Yeah, I interpret it as a bit of foreshadowing, but I don't know if that's the right takeaway. I just it was a big public pump up of the tires of Matt Nixon. I think there's like a view in the market that Matt Nixon is somewhat being he's the future leader of this business. When there's a management premium associated with RAL, right? Like what happens when RAL goes? Well, you kind of you need that period of succession, all that sort of stuff. Who was the Ned? He's not a Ned. He's an executive director that came in on a good wicket.
Duncan Coates.
Duncan Coates. Yeah, it wasn't. I found that interesting too. Like I do want all of those sorts of things. It's like I do think there's something's going on in relation to in relation to talent, bringing talent through, succession planning, all that kind of stuff at this business, and as you need to do in order to have a sustained management premium.
And I think we're on the same page in talking about him stepping to a chair role as not just going to leave the business. Like in my mind, that's how I see it. Kind of Jake Klein type thing. Maybe, Mark Clark as well. You go into the chair role.
Yeah. Still involved.
Do it that way. And then you're sort of, whether that's exec and then sort of in time. Who knows?
If we're wrong, Brad, please come on the podcast. We'd, yeah.
Your presence would be welcome.
You can tell us otherwise, yeah.
Yeah. All right, mate. I think that's a good spot to leave it. A lot going on in WA Gold and a lot going on at Genesis and a whole bunch of those other players.
There's activity. There is activity. There's a lot of activity. Yeah, gets you thinking, doesn't it? Let's thank our partners, though, mate. I've enjoyed talking
Let's rip
about
it, mate. Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, KCA Site Services, Black Diamond Drilling Services, and Cross Boundary Energy.
Hoodaroo.
Hoodaroo.